Hey, good morning, everybody. Today's another daily market report brought to you by Mike Bjork. Today is Thursday, May 27th, and wow, I mean, we're gonna take a look here. But the Dow has been on fire today. It's been over 200 as of this morning, um, and I'm just gonna start with the technicals below here. And well, a lot of it has to do with some comments that were made. Bullard basically said one of the Fed chairman or Fed board members basically said that he didn't see any problems that Europeans having coming over to the U.S., spreading into the U.S. Not sure where he based those comments, but anyways, I guess we'll have to wait and see. And then also some other news that came. There was a report by Financial Times earlier that China might be kind of paring down some of its eurozone bonds and to try decrease its risk exposure to what's going on in Europe. And basically, they came out today and said that they're not going to be selling off their bonds. So that kind of helped ease concerns for the eurozone. But our more local news, we got the jobless claims. It was down from the week prior, but still pretty high. We're still not showing a good job market here. Any strength in our job market here. And then the GDP, they came out 3.2 last month, and now they revised actually lower. They thought it was actually going to go higher, maybe as much as 3.3, 3.5. I've even heard in some circles, but actually came down to 3.0. So not the best of news. We need more sales, like GDP, higher GDP to be able to create more jobs. And if we're not showing that, it's going to be a while before we get out of this so-called recession or maybe depression. So anyways, let's take a look at what the bond market's at today. It's actually doing pretty poorly today. As I mentioned it earlier in the week, it came out of the trend line here, broke the trend line a few days ago, and it's been kind of trading sideways, so to speak. But we've been looks like it could be going towards a lower trend line. As you can see, it started off right up here, but then a little higher than, a little bit lower than what it was the close of yesterday. So, but it dropped down as much as 46 basis points, kind of testing the 10-day moving average, and then pulling back a little bit. It's right now about 31, 34 basis points. So, rates are kind of worsening for the moment. As of this week, the rates have been kind of declining. So anyways, if anything else changes, hopefully we'll have some better news. There is some treasury sales going on this week, and hasn't been so good. Today is the 7-year treasury, so we'll see if that's any better. But with the past, usually they want shorter term, and those haven't been doing so. So been only doing so. So we're not really anticipating anything really miraculously happening for today's sales. So we'll keep it in touch, but like I said, as of right now, with the stock market pulling money out of the bond market, and it really doesn't make too much sense when the GDP came in lower, as well as initial jobless claims still not the greatest. It looks like it's more emotional based day for Wall Street. So, but bonds are kind of suffering at that. So as we had improved from fears a while back, a couple weeks ago when it was dealing with the grease. So anyways, anything else changes, I'll get you up to date. Take care.